This is my 47th time trying to record this video in the past 2 days. This is not a joke. I'm being so serious. I never thought talking about take profits and stop losses would be so difficult, but it is. Anyways, Discord link in description, live trading room link in description, and execution video link in description. All links are in description. Moneypreneurs episode 7. Let's get straight into this one. Take profits, stop losses. Lonnie, where do you choose to target specific draws liquidity for profit? And or, Lonnie, why do you set your stop loss where you do? Well, we're going to get into all that today, and I'm also going to show you guys how to properly have a validating stop loss. You guys always hear me talk about this because I truly believe this is one of, if not the most important things within trading. If your stop loss is not at a validating point within price action and you get stopped out, you will never be able to learn why you got stopped out. The main thing of our trading is to go in and be able to learn from our mistakes. If we can't learn from our mistakes, we can't become better. And that's why I always emphasize with everyone in the Discord and you guys on YouTube watching this to have a validating stop loss. We're going to go in and show a few examples. If you're someone like me that has a set SL, a set amount of pips or set amount of percentage, we'll go into an example of that. We will also go into an example of someone that adjusts their lot size on the fly, where to set your SL depending on how you trade, and on top of that, we'll also go into where does Lonnie choose to target specific draws liquidity for profit and why he chooses to target those specific draws liquidity for profit on specific time frames. So I'm going to go find a few examples and we're going to cut the clip, and then we're going to be back once I found probably a good example, probably one good example. We only need one good example. This is the 47th recording. We don't need a million good examples. So let me find the examples and I will be right back. Anyways, so we did plot out a few examples. I went into replay mode just to make it a little bit easier so you guys can get more of an understanding. So let's dive into it. Currently, our confluence is with this trade. We're looking to take the sell position to the downside. Clearly, we're in a bearish market structure. Price action came up, took out these highs for liquidity. I almost said draws liquidity, but I guess you could say that too. For liquidity, came up, took out this 4 highs that came to come and take out. That's odd. Anyway, price came back up, took out all these highs for liquidity, and on top of that, retraced back into this hourly fair value gap, pushing price back to the downside, breaking hourly structure back down. So now, what confluences do we have? We have hourly confluence. If I go on a 4-hour time frame, we also have 4-hour confluence if I were to have used that as well. So currently we have macro confluence. So what are we able to understand from this trade? We can understand that this move is less of a micro move, a smaller time frame move, but rather a bigger move. But remember, with trade execution, if you guys haven't watched that video, I recommend you guys go watch it because this is how we get our sniper entries. Now, all we're simply going in, scaling down in time frame to do is get our sniper entry. And then we get to the point where we can target proper draws liquidity. With this trade, what kind of draws liquidity are we looking to target? We're not looking to target 5-minute draws liquidity, 1-minute draws liquidity, but instead hourly draws liquidity, even 15-minute draws liquidity, 4-hour draws liquidity, and possible daily draws liquidity, depending what confluences we have. A great way to understand where you're going to look to target based upon when you trade is by looking and analyzing what overall confluences do you have. What higher time frame confluences are you trading off of? If you're trading off of 4-hour confluence and hourly confluence, you're going to be looking to target hourly and 4-hour draws liquidity for profit. Why? Because that is what you're essentially trading off of. Forget the aspect of scaling down in time frame and getting a sniper execution. You are getting a sniper execution, but remember what a sniper execution is. It's a small time frame execution looking to catch the overall move. Understood? Capiche? Capiche. Good. Now, let's scale down in time frame. It's actually funny because we took this trade with the Discord the other day. We took this exact trade. But scaling down in time frame on 15-minute, here, we can go in and look for our entry and whatnot, right? Let's assume your entry was right here. Now, the question is, taking profit. Where should you be looking to take profit? Where could you take profit? Essentially, let's just say your entry was at the 15-minute break of structure to the downside, right? And you decided to keep your stop loss above these 15-minute highs within the hourly retracement. Now, going in on an hourly time frame, we can find what draws liquidity to target. Hourly draws liquidity. Why? Because this is an hourly trade. Currently, we do have a validating stop loss above the hourly highs within the hourly fair value gap retracement. And yes, we'll go into that as well. But currently, we're looking to see what draws liquidity can we target for hourly. First thing we need to make sure is that our risk to reward is a valid enough risk to reward for our first take profit in order to even take this trade. Personally, for me, I take 50% off of my trade position at TP1, and then I set stops to break even. So now not only have we made profit on the day, but we can allow our trade to ride and play out and do whatever it does, right? So, firstly, essentially, our take profit for an hourly draw of liquidity we can look to target could be this first hourly draw liquidity within this fair value gap right here, right? This could be, bam, our first take profit. Remember, we also have 4-hour confluence with this, meaning we can do what? Go on 4-hour. What else do we have? Wow, this is also a 4-hour draw of liquidity for profit. Bam. What else do we have? Let's continue to not scale down in time frame, but now let's go on a different time frame. Not different time frame, but now let's look for another draw liquidity. Wow, we have another draw liquidity right here for profit. Bam. Now we have 2. What one more possible draw liquidity for profit do we have? Well, for this one, let's go on 4-hour. Let's see what confluence do we have. We have another 4-hour draw liquidity down here, right? So we marked out our key draws liquidity on a 1-hour and a 4-hour time frame. Why? Because that is the confluence we have. Sometimes I like to go down on 15-minute as well and see, okay, what 15-minute draws liquidity do we have? Typically, I like to go on the time frame at which the time frame above the time frame I typically look to execute on, find a draw liquidity there, see if there's any valid draws liquidity, and then that's when I would typically go on my higher time frame confluence draws liquidity in order to actually look for profit. So in this sense, we have our final TP at a 1 to 2.49 risk reward, 1 to 2.5 risk reward, with our stop loss above these 15-minute highs within this hourly fair value gap retracement. Our first take profit is a 1 to 1.6, second take profit 1 to 1.72, and then last take profit 1 to 2.5. And now in replay mode, we can allow the trade to fully play out and see, okay, what happens. Of course, I already know the outcome, so I'm just going to play it for you guys with us continuing to push back to the downside. Watch me be completely incorrect. Let's hope not. Okay, anyway. Lonnie was not completely incorrect, right? So here you can see within this example, yes, we did hit all three TPs. In my example, yes, once TP1 got hit, my stops would have been at break even. The rest would have gotten stopped out at break even. Your trade strategy may be different. You may want to hold, keeping your trade position, your entire trade position open until you hit their TP. That's fine. Work with what strategy works for you. Work with whatever works for you. Remember, your trade strategy is your own personal way to trade. This is how I feel most comfortable with my trading. So for everyone wondering, the percentage I take off, typically 50% on take profit 1, 50% of the rest of my position on take profit 2, and then obviously everything else at take profit 3 with whatever is still riding, right? But now, I want to emphasize, why was this our stop loss? When I actually took this trade, our SL was a lot tighter, around 3.6 pips on gold, so points or whatever the case you want to call it, dollars or whatnot, right? I like to look at the percent, so 0.17%. That was my SL. Here you can see the risk reward nearly doubled. Why is that? Why do I choose to have a set stop loss? Well, let me explain. For the specific pair I trade, I found it most comfortable for me to go in and not be able to have to, think and measure out my lot size. A lot of people like to go in the lot size calculator, do X, Y, and Z. I'm not about that. That's not something I like to do. I like to have my set stop loss memorized. So whenever I enter a trade, I'm like, okay, this is how much I'm risking. I know my max risk. This is what it is. And I execute like that. Everybody is different, like I said. This is how I choose to trade. But what this forces me to do is it forces me to have perfect entries. If my entries are not to the T, then that means what I'm doing is I'm putting myself in the least most probable circumstance in order to get stopped out and lose a trade. That's why I always emphasize a validating stop loss. For you, in your sense, with you watching this video, I would always advise for you to keep your stop loss above key retracements and highs. Always, always, always. With my trading strategy, I've been doing this for over a year, around a year actually. Actually, I lied. A little less than a year. So I can go in and I know with my set SL where to enter, where to specifically enter with very, very, very micro sniper entries in order to still have a validating stop loss. For you that may be a little newer to the market watching this video or still intermediate, I would always advise to keep it above specific highs. Why? Because if you get stopped out, it allows you to understand, okay, what was wrong? Was my bias incorrect? Was my trade entry incorrect? What could I have looked to improve on compared to getting stopped out with a 1 pip stop loss or a 1.5 point stop loss and still have the trade go in your direction and be like, oops, well, looks like my stop loss was too tight. You don't learn anything like that. You have to give your trade breathing room in order for it to actually play out. If you want to gamble, full port. But we're here to actually trade. We're here to be consistent with our trading. I don't know why I said consistent like that, but I did. So that's why I choose to keep my stop loss where I choose to keep my stop loss. So now I want to show you guys one example of the same trade if you were to have had a tighter stop loss. Because remember, you can still have small stop losses. You don't need large stop losses all the time. I am just emphasizing that when you do, and if you do get stopped out, it allows you to fully get an understanding of, okay, what went wrong? Why did it go wrong? What could you have done better? In this sense, how you're still able to have tight stop losses essentially and still get sniper entries and still have a validating stop loss is by keeping it above key retracements. Within this trade, if you would have noticed by looking at the chart here with our trade entry, we had a validating stop loss not above the fair value gap, not even at the fair value gap, but instead at this 5 minute, what was it? Order block. Hopefully you got it. Brownie points if you got it, but bam, 5 minute order block right here. And on top of that, if we zoom in a little bit more, bam, 5 minute fair value gap retracement right here. We kept our stop loss above key retracement tools, signifying and allowing us to have more confidence that if price reverses, it still has a possibility to continue an overall price action. When you enter trades, this I'm going to emphasize, when you enter trades, your mindset always wants to be, when you set your SL, why would this trade stop me out? Before you even set your draws liquidity for profit, your mind should be focusing on why would this trade, turn around into a loss? Why would I be incorrect about this trade? You always want to focus on the downside of the trade. This is what allows you to stay emotionless when trading, because why? You're no longer focused on the profit. You're focused on your risk. What are you risking? Why are you risking? Why would the trade potentially not go in your desired direction? Figure these things out. And when you do, it allows you to have good set SLs, such as this trade, for example, having it above key retracement tools. So if price reverses, you're like, you know what? It's okay. Why? Because we have our validating stop loss above our retracement tools in order for price to possibly retrace and continue the overall trend direction. And or you can simply have a good entry in the beginning at, let's say, a liquidity sweep break of structure, keeping your stop loss above the highs of the liquidity sweep, for example, right here. Meaning, if price came up to take you out, your entire trade idea of that even being a liquidity sweep and break of structures to the downside was incorrect. It showcases you what to improve on. That was the little video about stop losses and take profits. If you guys need to go rewatch that video, rewatch it. This video. I said that video. It's this video. Why? Because I will always emphasize having a validating stop loss. Please listen to me when I say this. I learned something over the weekend, journaling my thought process throughout the first week of January, and I realized, okay, with one trade, my trade entry wasn't the best. My stop loss emphasized that. My stop loss emphasized, okay, my trade entry could have 100% been better on our 4.7K loss. 100% could have been a little bit better. My stop loss emphasized that. And so, what am I planning to do for the next week? I plan on going in executing with our sniper entries, but ensuring that our entries are so good to the point where I'm almost questioning why would price action come and stop us out. That's the mindset you guys need to have when going in and executing on these markets. Why? Because it then will allow you to look to enter on better trade executions. Focus on that, focus on that, focus on that. That was our little video on take profits and stop losses. Remember, I choose to target specific draws liquidity based off of the hourly and or micro confluence I look to have executed the trade off of. And I always look to have a validating stop loss above one of our retracement tools and or the overall high and or low of the move. Apart from that, that was our video. I hope to see you guys in the next one, which we are covering journaling. I have to go and record that right now. But apart from that, I love you guys, and I will see you in the next video. Peace. Adios.